Hello, everyone. Good evening and a very warm welcome to today's session on Experience Dialogues. I'm Sukanya, co-founder and CMO at FayrEdge, and I'm so delighted to be moderating this very timely and crucial conversation, reimagining retail investor experiences, building long-term trust. In fact, when we just look around the environment of the investor, we are at such a pivotal moment in India's financial evolution. In fact, the demat accounts are growing exponentially. Retail investor participation continues to surge, especially what we've seen post-COVID. And the individual investor today is more digitally savvy, informed, and expectation driven than ever before. But you and I aren't just investing for capital, we are investing for trust. But yet, beneath this boom lies a very quiet tension, experiences that feel fragmented, communication that often lacks transparency, and a growing trust gap that risks long term confidence. And as custodians of investor relationship, organization and their leaderships are increasingly being called upon not just to deliver returns, but to deliver assurance, clarity, and a deeper sense of inclusion in building that trust. And I'm so thrilled to be joined by two very distinguished leaders who we have in our midst today, who sits at the intersection of strategy, capital stewardship, and also investor engagement. Mr. Ajay Bagri, who is the CFO of SEIL Energy India Limited, and Mr. Amit Joshi, Senior President and Chief Investment Officer at Bajaj Allianz, Bajaj General Insurance Alliance. However, I want to make a disclaimer upfront that our panelists today will speak in their individual capacity as senior industry professionals, sharing their own reflections and insights. And given how seasoned they are in their profession, clearly they've crafted and carved out a very inspiring journey to occupy today very significant leadership positions in leading strategic enterprise missions. And we'll just bring up their brief profiles, and I'll let you read up the details as it just comes up on screen. And Sampa, if you could just bring up the bio profiles of our panelists. And first up, we have Mr. Ajay Bagri, who has been very active in the industry forum, a leader who inspires his fraternity by continuously speaking about the shift in the role of the CFO as a critical strategic leader by leveraging data insights, leading the charge in aligning to drive sustainable growth, embracing new technologies, effective collaboration with other C-suite executives as well. And truly, these are all sort of, music to ears coming from a CFO. And I must also mention that, despite a personal situation this week, which was challenging, Ajay has been committed to stay intact to come to the conversation today. So Ajay, we're so truly humbled with your kindness and looking forward to your insights to come into the discussion to enrich today's dialogue. And
Thanks,
welcome Mr. Ajay Bagri on Experience Dialogue.
Thanks, Kanya, and I welcome all the participants.
And next we have Mr. Amit Joshi. And what is very evident in the many different diverse initiatives that Amit has himself led is about leveraging technology, leveraging data to drive insight, and thereby to drive personalization across the investor community, which then brings in very contextual offerings for varied segments. And as you're just reading up on his profile, which is so rich, I also wanted to mention how interestingly, with his passion for sports, cycling to be precise out here, he's coupled it to drive larger societal impact. And case in point, with his CFO charter fraternity, he took to an inspiring campaign called Jan Nivesh Abhiyan, whereby via cycling tour across different cities and towns, he spread financial literacy. And I just want to make a mention of that because it speaks volumes about the passion to drive meaningful ground impact in an area where one has mastery. So food for thought for all of us to be inspired on how we play to our strength to drive larger impact. So, Amit, looking forward to your perspectives on many important session themes today where tech, data, personalization, transparency helps build trust, right? As we reimagine experiences for the retail investor. So, welcome, Mr. Amit Joshi on Experience Dialogue.
Thank you, and look forward. I think it's going to be an interesting session, and let's
Indeed.
start with that.
Indeed. And in fact, on Experience Dialogue, as we launched a multi-stakeholder track, this is going to be our eighth session in just over 3 months. And the retail investor persona is the fifth persona that we are putting the spotlight on today to be able to explore how data, AI, proactive listening can reshape those experience strategies. And the moot question is, what does trust truly look like in today's complex, high-speed financial world? And I must say, I make this mention again, while I just mentioned it to you all earlier as well today, on this very auspicious day of Guru Purnima, I'm looking so forward to learning from both of you as experts. And before we get into the session, questions, Ajay, Amit, anything you want to add uh, in terms of the context of the dynamic environment backdrop of the retail investor?
So I
Uh,
think Sukanya,
yeah, go ahead.
first thing which comes to my mind is that in India, the retail investors actually have come to the fore in last, I would say, 5 6 years. We have seen how the proliferation of demat accounts, the proliferation of mutual fund investors in terms of numbers as well as volumes. So I think people are now realizing that they need to take their financial future seriously, and that is, I think, a very healthy sign for Indian economy, because a vibrant economy needs vibrant capital markets, and retail investors are one of the key, I would say, pillars for well functioning and well regulated capital market.
Absolutely. Ajay?
Yeah. So basically, I think uh, let me first of all thank FayrEdge for having thought of this topic, because my first reaction it was why so. I mean, if you look back about 10 years or from the time, the stock market exists, retail investors, uh, the the vision or the picture which we carry for retail investors is fine, they are there, but rather than some retail investors gathering at the AGM, which is an annual event, apart from there wasn't used to be any need to cater to the requirements of the retail investors. And in fact, head of investor, I have worked as the head of investor relations. In fact, the investor relation function itself is quite a, upcoming function in the capital markets, with the kind of growing market capitalization and the funds being raised from the capital market. Of late, people have started realizing the importance of the investor relations, but that's happening more towards the institutional side. Retail side, as of now, I haven't seen much thoughts around it, and therefore, to that extent, you being, I think, the first one to debate on this topic, it's really interesting. And as we move forward, I would add on certain facts as to why retail is becoming more important. Yeah.
No, thank you for those mention and kind acknowledgement. And we really look forward with leaders like yourself to be able to sort of carry the momentum forward. And hopefully tomorrow it should become a movement in the near future. And so let's, I think, drive in and together explore how organizations can truly earn retail investor trust and also sustain it experience by experience. So let's begin at the top. And Ajay, my first question is to you. So retail investors today, like you mentioned, are so much more informed, vocal, and even values driven than before, right? So how should companies rethink their relationship with them? They clearly aren't just investors, shareholders, right? I mean, are they also stakeholders and even brand ambassadors? Your take on the evolving investor identity as well.
Uh, yeah. So I think why I said, you are the first one to capture that is, if you look at, and I'll give you a bit of an update from the industry, uh, the kind of people you saw on the funeral of Dhirubhai Ambani, uh, that was unprecedented when it comes to somebody, some leader funeral happening from the business world side. Now, that was because of the large investors base which got benefited from the Reliance Industries. So perhaps in the stock markets, the participation of the retail investors started from the time when the shares of the Reliance Industries got listed, and from there the momentum got built up. Uh, Now, today, what is happening is post demonetization, there was a financial inclusion which got happened. People saw investing into equities as one of the investment avenues, as Amit rightly touched upon. And therefore, the data speaks for itself. Demat accounts going up from 5 crores to about 20 crores in the last 5 years. Uh, Even in my own company, just before this session, I checked up with my erstwhile company, Tata Power. I said, what are the kind of increase in the retail participation, if at all, you are capturing? So the guys told me that as against the 5 lakh investor base, today they are having about 13 lakhs investors base of retail participants. Today they are having more than 50 lakhs. Now, then I realized really the importance of this topic, and uh, also, as you rightly said, shareholder is simply a person who is holding the shareholders. But in order to take him to the next level, being a stakeholder, and then a stakeholder, if at all he is really being needs are being addressed, he can be converted into a brand ambassador for the company. Look at the recent examples, and this hold good especially for the companies which have recently been able to raise money from the capital markets. I'll take few names, for example, Zomato. People are experiencing, they are there as a customer, and then when the IPO comes, it's not that they are purely guided by some of the analyst recommendations, it's their own experience against which they are taking an investment call. And today, uh, the average age of investors, if at all we have that data, would be maybe in a range of 25 to 35 years. So they've got a long horizon towards equity. It's not that they're coming as a trader. Uh, we would build upon as to how the retail investor needs to be catered, but particularly when we are talking of that, if at all the companies are required to look at relationship with them, making shareholders a stakeholder, making these stakeholders as a brand ambassador, then right, the companies like Zomato, Nykaa, uh, you name, these, there was a retail company in the luxury segment of furniture, Stanley, Paytm, Policy Bazaar, FayEdge, Angel One. All these are companies which have got a customer-facing business, and these customers are whenever they have the need to raise money, these customers are their brand ambassadors who talk of and make the narrative for the company, whether an investor has to come in or not. I would like to touch upon one small point. Look at the recent fall in the stock markets from October 2024 till March. There has been a massive sell-off from the financial institutional investors on account of the money being shifted to the US because of the changing interest rate regimes. But look at how the markets have been, and Amit would definitely add on to this one. The kind of money being poured in by the retail investors through domestic institutional funds, through a systematic investment plan, we are holding on to these levels. We are back to the levels whereby the sell-off started. So from that perspective, I think it's beyond doubt that the companies would have to take cognizance of these factors which have changed over the recent years, and would have to look at making separate strategies, separate listening channels, separate tailor-made communication narratives for the in order to cater to these retail investors and capitalize on this database which the company acquires through now it's all digital, so you have the database of these large retail investors you have, which can later on be converted into your brand investors.
No, I think, Ajay, many vital points you've made. And yes, they are clearly stakeholders because their expectations spanned, beyond, governance, right? They're looking at transparency, long-term value creation, and also what you just mentioned on brand ambassadors, because they're already so deeply connected to the brand before they, start investing. So, I mean, there is so much of opportunity that they have as ambassadors to amplify or erode that trust based on the experience. So, we need to have that recognition that they're truly an integrated partner, right, in our
Right,
ecosystem.
right.
Yeah, no, thank you for that. And that leads me naturally to the next question on trust, Amit. So, in this era of increasing complexity, just to what Ajay was alluding, and what does trust really mean for today's investor and for organizations as custodian of that trust, right? How are we, or how can we deliver on it consistently?
So, Sukanya, when we talk about trust, I think it is a small word, but it has very, very big ramifications. Whether you talk from the point of view of organizations and or for the from the point of view of the investors or customers. Now, trust means that it has a financial value actually. If you look at the more trusted brands in financial services sector, their cost of capital is actually comparably better than less trusted institutions. Why is that so? It is simply due to the fact that, let's say, there is a company which has been very transparent in its dealing and have been communicating everything to the stakeholders on a regular basis. I think they are more and more inclined to actually be with that company, whether it's a mutual fund or a direct investor in a share, or for that matter, even an insurance company. So trust means that the overall cost of doing business also goes down for the institutions. I think one pertinent example comes to mind. Let's say take example of any large bank, and typically you know that in India deposit rates were earlier regulated, now they are not. So banks are free to offer deposit rates as per their requirements. So if you see the trusted brands in the banking sector will consistently be offering much lower rates to the customers, but they are still able to attract higher deposits. That is the, I would say, cost or benefit of the trust which you have in the system. So, and for different participants in the financial markets, I think trust will mean different meanings. For example, let's say from the point of view of mutual funds, what is the trust? Investor needs to trust that they are true to label. If they are managing a specific fund strategy, they have to make sure that all the processes are focused on the best implementation of that strategy, and that they do not dilute that strategy based on the market movements. For example, let's say a mid-cap fund. It is always better for the fund manager that he sticks to the mandate rather than going into some other market cap stocks just to chase the short-term performances. Because over a longer period of time, if he is true to label, I think overall trust of the investors will be augmented. Similarly, for an insurance company, if you talk about, moment of truth is the claim experience. Every insurance company basically is making a promise that for a premium you pay, if there is a eventuality, they will pay the claims. And the moment of truth is that when that eventuality happens, what is the experience of the ultimate customer? Whether he is happy with it, or he is having a lot of complaints, grievances, or he is having a difficult, I would say, claim experience in terms of journey. He has to file 10 forms and submit different documents. So overall, I think it is the most important objective for any financial institution when they are dealing with retail investors. That how do they make the experience at the time of moment of truth very smooth, very simple, and memorable. Because once you do that, I think then you have the client for life. And trust itself is a, I would say, compounding entity. Go back 25 years when the private sector mutual funds just started in India. It was an uphill task for them to collect AUM because people never believed that mutual funds will be the good custodian for their hard-earned money. They had some previous bad experiences. If you go back early 90s and all, there was a proliferation of different kind of mutual fund schemes where investor experience was not very good. So it took a very long time for the mutual fund industry to establish that trust that, okay, fine, we have learned from our mistakes. Now we are following the international best practices. Also, I think India's institutional framework also underwent a huge change. We saw SEBI coming in with very investor friendly measures, whether it's for mutual fund investors or direct equity investors. That also helped. And see how the journey has been. The compounding in terms of mutual fund AUM is simply mind boggling. Probably what it took the industry to collect in a year, now they are collecting probably in weeks in terms of AUM. And that is the compounding effect of trust for the financial institutions. And just to add as a last statement, trust is compounding and it takes a very, very long time to build. But if you do something wrong, it can evaporate overnight. So organizations have to be very, very careful about how they manage this trust which has been endowed with them.
Right. And, with the advent of, technology to be able to use it responsibly. And I think, one distillation that I'm also taking out of what you said is really the consistency, right? It's not just delivering that experience in good times, but especially when markets are tough, that's when reputations are truly built. Yes. So,
Um, Amit, I would like to add uh, any conversation on trust for the either investors, bankers, or if it's to be talked of, I think it's incomplete without mentioning how Tatas have capitalized on this word trust. You remember that uh, the fiasco of the Tata Finance, whereby there was a siphoning of the funds, and Tata assured that each and every penny of the depositors would be refunded. So I have spent most of my career in Tata, about 18 years, and I know the way, it's there in the DNA of Tata. I mean, it's simply clear. You just have to do, you just don't have to get any clearance from anybody that what you are doing, whether it's in the interest of building up a trust towards the either investors or lenders community. That's there in the DNA, and that's how they have been able to capitalize. So just wanted to add on to.
no, no, very
Yeah,
true. I think on that mention, it truly lends itself to character building. So
yeah,
when you think about that brand, you know exactly what to expect, right?
right. Today they
Yes.
have become established themselves as a synonymous with trust. Yeah,
Right, absolutely. So before we go deeper, we'd just love to hear from the audience and get some engagement going and bring up a poll question, which can also give us some food for thought to carry on further. So I have to see the poll coming up already. That's interesting. So we'll just give it a few more seconds. All right, I think we can't. It's almost 92% are saying there is huge opportunity and room to
so
play.
that my proves my
Proactive.
point why you deserve appreciation for taking up this one.
No, absolutely. There's a huge gap out there. And
Yeah.
Sampa, if we could just conclude the poll and move forward, share the results. All right. Okay. So That, in fact, gives us the ability to double click on what we just saw. And like you were mentioning that, the younger, more digitally savvy investor, Ajay, the market now has a lot more of evolving expectations. And this is, in a way, a representative of the ecosystem, right? Our respondents in the audience today. So, how are we truly listening to them? And whatever we are listening, how are we acting, right, on what we hear across the investor journey?
So, as we have seen, and the poll is reflective of the situation on ground. People would definitely try to make strategies around, but when it comes to listening, in today's world, there are ample mode of listening. Retail investors are onto the internet. There are websites like you know uh, forum whereby you can share your views, threads, fora, YouTube comments, and the very fact you are being searched on a Google, the Google search result, again the social media sentiment analysis, etc., are some of the avenues. But what I feel is there is still needs to be more needs to be done on this one as to how the organization would create avenues. And but one thing is very sure, or very sure, that today it would be quite easy, even if, as I talked of the numbers like 50 lakh retail investors, but it would be easy to capture the perception or the need analysis of these uh, such large number of investors base, because you have those platforms which are available. Now, there, in order to filter down, you can always use AIs. Uh, so, what I mean to say is, uh, even if the numbers have grown to a times whereby we can't think of the manual systems to take care of such large numbers, but taking help of these uh, avenues which are available to us, we can start capturing uh, uh, the requirements of these retail investors, their views, their perceptions, and as the objective is to convert a shareholder to a brand investor. So analyzing these needs and taking action points, and then having a, I mean, over a period of, it's a journey, but the ultimate is you establish a dedicated channels, like the way the investor relations has evolved over the last 10 to 15 years. Now you have a chief investor relation officer dedicated to catering to needs of the institutional investors. So similarly, there is it's a right time to start thinking and move towards a journey whereby you have a dedicated relationship officers for the retail investors, because the needs are a bit different as compared to the institutional investors. These guys, uh, they would like everybody has a mobile phone on a hand, and therefore the moment your results are out, they're not interested in there would be all kind of investors, be it housewife, be it uh, some uh, some student, or a retired officers, or there would be person from all spheres of life. So if you would like to communicate, uh, you need to communicate a bit of a vision rather than your quarter to quarter financial results. Because as we said earlier, these people, they have got a horizon, very long term horizon of investment. Today, if somebody is investing at 30, 35 years, and if he's hooked on to a company, he has stories available in the market that today, if somebody is an investor for 15, 20 years, it makes a lot more sense to grow with a company rather than doing spreading around those shares and earning some 10, 15%. So the companies would have to take care of these, taking clue from these. Once they have to keep these investors engaged about their vision. Once they are hooked onto your visions, they are going to be your brand investors.
Right. I think a lot about the why as well, right? And I think
Right.
what you said, leveraging those data analytics, driving the shift to be more real time
Real time.
in getting to that pulse. And clearly, one size does not fit all out here. Needs are very varied. The younger investors are looking
I'll
for
give
more
you another example.
interactive
Yeah, I'll give you
formats.
another example. Like, I have seen, retail investors, for example, somebody is a technocrat, he's an engineer. Now, he may not be knowing the profitability aspect or the governance aspect or a quarterly results of it. But if I had analyzed with him as to which refinery is better, he's clearly able to differentiate between the point of, you know, uh, the technology edge, which out of the three oil marketing companies, like I would not like to name being a social platform, but a particular company has an edge over the other two oil marketing companies. So people have that kind of a ability to identify, or if we see the new age companies, the kind they're into losses quarter on quarter basis, but there are retail investors who have vision that these companies will be able to generate profits in the long run. So that is what is very, very important to capture, and then uh, feed on the data points, the achievement, how the company wants to achieve the vision, so that the requirement of these retail investors are catered.
Right. No, absolutely. And I think, you brought in the whole mention that, yes, it is a continuous journey on how we will be able to embed the culture of, being responsive to evolving expectation, right? And then building trust alongside. What I'll also do is that Ajay, Amit, make some quick sort of decisions to be able to, alter some questions out here. And Amit, just picking up from what Ajay mentioned, right? The need to also share the vision. So, which means to say it's not just the what, but it's also explaining the why. And so, how are we helping our retail investors understand the why behind the investment strategies? And the
I
real
think
transparency comes in, right?
right.
In
So
sharing the same.
over here, I think now looking at the large numbers here, it would be, I think, humanly impossible for the organizations to be able to explain at the last mile how the decisions are being taken and why they are being taken. I think here comes the role of a, I would say, educated intermediary who could be a human intermediary or who could be a AI bot, which will help. Why I'm saying so? Because different people will have different expectations from the institutions they are dealing with. It's not one size fits all. So let's take the example of a, as Ajay mentioned, that most of the investors these days are young investors. I think their investment horizon and return expectations are very different from somebody who is, let's say, middle aged and who is probably closer to retirement and looking at different kind of investment strategies. So, how do we make sure that each and every investor gets a tailor made solution for his own investment journey? A lot of work is happening in this space. Some companies are making AI assisted bots where basically if you input your basic information, your risk appetite also, and what kind of portfolio you're already holding, you can get a solution in terms of what should be your ideal portfolio. Now, whether you want to implement or not, it's up to you. But you get a fair idea that, okay, fine, this is where I am, and something which want to achieve in next few years, this is the kind of portfolio which will help me achieve that. So role of intermediary is important. And one good thing which is happening in India is that regulators are also aware of that. So they are also trying to make sure that as far as financial education is concerned, there is a certified intermediary examination now that you have to clear before you basically can advise people. So that is also helping. But I would say that now these days there are so many avenues available where people basically go and seek their own information, and at times it can be half-baked information. And the resultant fact is that if you see the number of financial frauds which are happening in the country are going up every day, and also people come across some dubious channels where they get some advice which is suiting the advisor rather than the actual investors. So people
Right.
need to differentiate also, and a lot of work is happening, but I feel there is a very long way to go, because given the fact that we are a large country with a very large population, I think to address the needs of such a humongous investor population, an IT enabled solution, I think ultimately will be required for most
Right.
of the organizations. And
Right.
they are also developing. Some are developing it in house, and some are developing with the help of, you can say, external entities. But without that, I think to get the experience to last mile and to make sure that each and everybody has, I would say, the optimal advice is very difficult to achieve. So that's where we are right now, I think.
It's a
But
fine
we are
balance.
we are moving towards that, I would say.
Right. It's a fine balance between human intermediaries as well as technology, right? To play to both scale and context and not just
Yeah, one
relying
more
on.
thing I would like to add here is that I think technology platform certainly will help collate the data, put all the facts before you. But in investing journey, there is a emotional connect also required. There needs to be somebody to handhold in case the markets turn and there is a turbulent period. Typically, bad investment decisions are taken at the times of turbulence. You try to exit positions when you should be holding on to them, or you buy something in euphoria and then you are left with that for a long time without any returns. So that kind of hand holding is very important as far as I would say retail investors who are not very savvy about the markets.
Right. No, I think those are very important aspects you brought in to just humanize, right, the
Right.
experience journey so that they don't feel left in the dark after their decisions. And with the why, it's truly to empower them. In a way, you're transforming them to shift from becoming, not just passive, but also become more informed partners in the journey. Right. No, I think that was helpful. And if you were to just take a step back and defined what great investor experience looks like, right? And Ajay, I'll come to you. Uh, how would you articulate that? And in a way, who owns that experience inside the organization?
Uh, so uh, historically, before digitalization, even typical interaction used to be transfer of shares, dividends not credited, or if transfers through the legal years process and all that. Uh, but I think now with the digitalization, a lot of these issues, although there would be some, but I think these are largely settled. So from the investors' great experiences, what I feel is now, as I said, it's all about receipt of a communication. Uh, so so if I were to think of giving a very great expectation to the retail investors, forming some sort of a dedicated retail investors club and a uh, tailor-made information being supplied to them. Because what's happening is, first of all, the basic results, which are to be prepared as per the regulations, they are into a format which caters to the regulatory framework. In order to turn them into a form which is understandable by the analyst and the other investors community is another job which is being done by the investor relation office. But uh, I think from the retail investors perspective, uh, it is something which is in the form of a very the way it can be related. So rather than really going into numbers, if it can be told into some sort of a story, a bit of a historical perspective to uh, the overall financial or the operational perspective of a company, it should be there as a part of the storytelling. So that the investors can correlate and they can see that how the company has grown. Because I don't think so. Retail investors, if he's really interested in a company, will be looking on some developments on a quarter-to-quarter basis. Rather, he may not have time. But yes, if he's getting some historical perspective that my company uh, is leading or is traveling a path, and if he's able to correlate, to my mind, that's going to be the great uh, experience for retail investors.
Yeah, no, storifying. And
Story.
Ajay, who owns that experience inside the organization? One team, team?
As of now, it has to be because retail investors, the database lies with company secretary, so it has to be a bit of a multidisciplinary approach. Uh, and typically, the company secretary office and the investor relation office, the two of them should be jointly owning it.
Okay, that makes sense. And just on the core segment of the session questions, my last question, in fact, goes out to both of you. If you were to just put your founder's hat and if you had to build retail investor experience from scratch, right? What's that one thing that you would do differently from how it's been done today? And maybe Amit, you want to go first? Very quick
I
response.
think typically any financial system after it grows, it becomes complex, and complexity keeps on increasing in terms of product proliferation and strategies. Just to give you a data point, in Indian mutual fund industry, currently you can have 1,400 different schemes which are available across, where around 75 lakh crore worth of AUM is being managed. Now, for a typical retail investor, it will be very, very difficult to basically zero in on a particular strategy where he should invest, how much he should allocate, and how actually he should manage it over a period of time. So, first thing I think I would like to make sure is that how do we make it simple? Can we
Clarity
can
over
we can we
complexity.
can we make it a step-by-step approach where some basic questions can be asked, which leads the person to the right strategy, which will suit him? Because otherwise, it's he's completely lost. There are different strategies with different risk return characteristics and also different tax treatments. Now, strategies attract very different kind of tax treatments. Some
Right.
strategies will attract tax at full marginal rate, and where some strategies will offer you long-term capital gains at concessional rates, and so on and so forth. So, how do you make sure that when you build a portfolio, it suits your risk return as well as tax objectives? And
Right. I think
how
education,
to
right?
simplify that? Can you
Right.
funnel these 1,400 schemes and simplify that for a retail investors should be the goal. There are companies who are working very deeply on that. But unfortunately, I think I am still to see one solution which will basically, I would say that, okay, this is it. I think we are still some way away from that.
I think we all relate to it in terms of, bringing clarity, simplicity over complexity, right, on educating the retail investor and bringing in, I think, a format of layered learning as well. So, Ajay, what would you say? What would be that one aspect if you were
What
to
comes
redo?
to my mind is I would really like to formalize it with having a retail investors club, and a company would have a dedicated retail investors experience officer, like what we have a dedicated, so that it gets focused and is not lost. You should have a dedicated strategy. It's a Now I think time is ripe to really start thinking on this one. And uh, companies, I think the being an accountant, I'm forced to think that way. The company would have a fastest payback period on those expenses which are incurred into this segment. You have a huge database. There are, you know, at times quite good number of questions which got asked by these retail investors as seen in the AGMs, etc. So listening to them, and the way to communicate to retail investors would be a bit different than institutional, because those guys would have access, they can do a plant visit, they can have access to the management. But here you have to cater into a different way. You have to have a, let's say, monthly update about the company on a YouTube, or, if you have some uh, good special state of state of art facilities, making videos of those facilities, and putting them on the dedicated section on your website for the retail investors would educate the retail investors to be more engaged with your company. So these are just couple of thoughts, but I think once you
Very
have a very
pertinent,
dedicated on this one,
right?
you can keep on building on this.
Very pertinent, Ajay, you gave a very progressive sort of gold nugget out here. If there are customer experience fraternity, right, it's about time that the retail investor fraternity has an experienced champion, and we will lean on to you to be able to give momentum to this line of thinking. And you also mentioned about listening. How can we listen differently across the journey, across channels? So that's been so wonderful, and I will now look ahead on enlisting the audience to post some questions as we get on to the audience Q&A. And like most of the sessions, we've been very fortunate to receive some questions in advance at the time of registration itself. So while that is warming up, I will make a start. And Ajay, I will come back to you first again. So the first question that I'm just looking at from that list of questions is, what are some of the red flags that indicate retail investor trust is eroding? And how can you catch, them early, avert them?
Yeah. So I think primarily, as we talked of, that companies do have systems whereby they can capture their retail number of the retail shareholders. So as I'll keep I normally keep making analogy with the institutional investors, so that what I'm saying is there is another category which is evolving. So basically, like you see on a simple screener, if you see the percentage shareholding, there is a percentage shareholdings of financial institutional investors, there is a percentage shareholdings of a domestic institutional investors, and then you have a retail participation as well. So I think the first red flag would be the dwindling retail holding of your company. The second one is obviously you can't ignore social media. Uh, there could be various uh, platforms on which there could be certain negative comments on your company, and if at all there are certain videos around the uh, by some analyst analyzing the results of your company, the comment and the comment section, you can get the feedbacks of the uh, people. While obviously you have to take them with a pinch of salt, there could be certain vested interest who would be doing it in a not in a bona fide way, but you can always make them when uh, you see those comments, whether it's really uh, with a malified intention or with a bona fide intention. So I think so. Basically, dwindling retail participation, the comments post on the social media, and uh, I think also at times the in a customer companies with a huge customer base, uh, any events, for example, the recent Boeing plane crash saw the fall in the share price of the Boeing company. So now it's a correlation. Obviously, any bad experiences being posted by your customers would have an adverse effect on uh, the investment theory of your company. So I think these are uh, some of the avenues which comes to my mind.
Right, right. And, it's across those small moments, right? Whether it's lack of timely updates, friction in redressal as well. And as finance leaders, you all really have a vantage point to see these signals beyond, what the balance sheet tells you, right?
Right.
So, and I'm looking at my next question while there isn't a question on the chat as yet. So, Amit, to you, what role can AI play in making investor communication more accessible and transparent? Some of it I know you alluded in your earlier comments as well.
So, interestingly, if you look at it, what we did in the insurance industry, insurance policies are notoriously lengthy documents where a lot of legal terms are involved. And many a time, somebody who buys an insurance policy finds it very difficult to sort of arrive at a judgment that, okay, what is covered and what is not. So I think AI has a big intervention here, but we have developed within our company is a system called Insurance Samjo. You simply upload any kind of policy document on that and ask any question which comes to your mind. It will answer you with the almost 99% accuracy. So that is something which AI can help achieve to different financial institutions. I think insurance is just a reference. Whether you look at mutual funds, also I mentioned there are 1,400 different schemes available. So what AI can do, it can very quickly analyze and summarize in a layperson language that okay what it means, and from there on I think it could be the person himself or he can take advice from somebody who is actually more skillful or knowledgeable about these things, and the journey could be very very enriching and fruitful.
Right. And, expanding now to even tier 2, tier 3 towns where millions of first-time investors, engaging in their local language, right, via their own handheld devices.
So just to share with you now, very first time in India, our company has offered a policy state-wise in state language of every state, and it also has special features depending on the customs of that particular state. The festival which fall on different date, so it has different trigger events. So it is hyper customization, I would say, in terms of product offering by understanding the last mile customer in their own language. So I think this is where I think AI can really help, and give it 6 months to 12 months. Such products are already in market, and they will be, I think, everywhere. In most of the mobile devices, you will find them, and that is, I think, a very very big step, because we already have customer trust which has been built over a period of time. Now it is the time to augment that trust and make sure that it doesn't go away.
Yes, and this could be a game changer, in fact.
It
Yes.
is. It is.
Yes.
No doubt, because removing complexity will mean that trust gets further strengthened, and it's good for the financial system.
Right, removing overheads. And I already see a question on the chat. It's a very interesting one. So I leave it to the two of you who would like to answer with respect to Principle 4 of BRSR reporting, right? That relates to stakeholder engagement. So what would be your suggestion to industry leaders in respect to that on BRSR reporting to retail stakeholders?
I think Ajay, you would like to take that.
Principle 4 mandates, right,
Yeah,
organizations
that's right.
on engaging stakeholders and how we deliver experience. So this is, in a way, zoning on to the retail shareholders, in a way, going beyond the rule book, right?
In fact, I think in terms of disclosure, I think this is basically about the disclosure in the
Right.
annual report, where a lot of detailed disclosures are now regulatorily mandated, which should be made for the benefit of all investors. I think retail also is covered under that. So there are disclosures related to your ESG practices. How are you doing on your environmental, social, and governance activities? What has been the trajectory over a period of time? What new initiatives you have taken? And most important, what you promised in, let's say, previous quarters. Are you up to that, or are you lagging, or are you ahead of the stated objectives? All that is covered. And I think kudos to our regulators also. They have made these practices sort of mandatory for companies to report. So, which is always good. I think transparency is something which reduces the cost of capital for the financial system as a whole. And given the fact that India is a growing economy, I think if cost of capital comes down due to these initiatives, it's always welcome.
Right. No, I think two things that I just picked up, Amit, to what you said. One is clearly the ability to provide value as promised, and to sort of, ensure that you are bringing to the fore, dimensions of fair experiences, transparency, as you called out, right? So it's going beyond just what is mandated. No, thank you so much. And I will bring up the interesting segment that most of us look forward to, which is the rapid fire round. So I'll throw up a few quick questions your way. So treat it as a lightning round in your investor engagement. Spontaneous answers are welcome. So I'll go first with you, Ajay. So what is that one metrics that organizations should start measuring on retail investor experience? So whatever is your top of your mind, one.
Uh, I think the as we normally do for any function, you take on the feedback, and then you collect data as to on how many feedbacks have been received and how much on what are the actions which have been taken on those feedbacks. I think that should be the starting
Great.
point to start a journey. Yeah.
Closing the loop, yes. And one myth that, commonly investors have that needs to be busted, which they
That
believe is
there
not
are
true.
that there are free lunches available. I think one should always be fearful about an offer which is too good to be true.
Right, right. No,
Very
protecting
true.
their interest, yes.
But at the same time, I think another myth is that institutional investors would always be in an advantageous position, and retail investors would not have access to the information. That's also one of the
Right,
point which normally has a bearing on the retail investors' mind,
right.
which may not be true because now we are talking of,
Absolutely.
and if we really investors wants to engage with the company, companies would be able to provide information to them.
Yes. No, I think it's
I would just add
democratized.
here. I would just add here. I think it is not that dearth of information. I think what to do with that information is the challenge here. It's We are living in times where we have, I would say, over information, and uh, at times I think too much information also is bad for investors because that tends to bias their decision making.
Yeah, right, right. And so, Amit, what is it one thing that, organizations should stop around retail investor experience?
I think first thing they should do is to stop taking them from granted. I think they need to put the investor in the middle of everything, every decision they make, because it's not the job of any one department, any one person to make sure that experience for the ultimate customer is good. I think organizations have to come together as one entity. Because at times people think that it's the job of one department to make sure that customer should be taken care of. It's not like that. Typically what happens, the customer will interact with multiple I would say channels in your organization. So unless and until the organization is fully geared up to make sure that they look at the customer as a single entity where each and every aspect is taken care through systems, people and processes, it is very very difficult. So that's what I would highlight. I think
No,
put the
absolutely.
customer in the center.
Yes, and I think, and those who are not really prioritizing retail investor experience, they're risking their own relevance, right? No, thank you so much to both of you. And that's been a really powerful conversation. Sampa, if you could just bring up a session end poll to see how we've delivered on expectation. Um, So in a way, whatever is coming up is truly reflective of the quality of how you led the discussion, Ajay and Amit. So there's been so many clear takeaways, and transparency, trust is what brings down the cost of doing business. That has come in number of times in what you've said. Today's investors needs to be heard, right, and respected. And everything that we do on the experience journey has to be continuous. And the retail investor now truly is giving us a competitive differentiator. So we would be risking our own sort of existential reality if we were to, undermine it. And I just want to, on behalf of FayrEdge, thank both you, Ajay and Amit, for being part of this dialogue. And together, there's really so much, I think, of opportunity for us to be able to lift the game on building that long-term trust for this segment. And to all of you in the audience, next up on Experience Dialogue, we will be shifting focus to a very important stakeholder, the GTM partners, on driving mutual collaborative growth and success. So stay tuned. And thank you for your time and attention for another very engaging conversation. And until then, keep listening. And we look forward to welcoming you back again. Thank you so much. Thank you, Ajay. Thank you, Amit.
Thank you. Thank you,
Thank
Sukanya.
you. Thank you, Sukanya. Thank you. Thanks all the PhD.